everyone, and welcome back to the Vertex Investing YouTube channel. Now, before we get anywhere, as usual, I just want to say thank you to everyone who has supported Vertex from the very start to where we are now. As always, it's very much appreciated, and I can't obviously express that enough. But hopefully, the content we provide is a good way of showing you how much we appreciate it. I know it's been a while since our last video. I've just been very busy, but I also want to create videos that are as useful as possible for you guys, and I hope that in the meantime that the previous content that has been released is doing well for you guys. And thank you to everyone that has reached out to show us how you're getting on just simply using the free content that we provide. So in this video, all I'm going to do is simply explain what I sent yesterday. So yesterday in our free Telegram group. So if you haven't joined, there is a link below in the description. Well, there should be a link if I remember to put that in. I'm sure I will. If you haven't joined, make sure you do, because there's plenty of other case studies that you can go over and learn from. Each of them has its own little learning point, and there's always a little paragraph at the end. Now, in this one, it's a little bit different compared to what we normally do, because this is a scalp trade that was taken. So it's a breakdown of that trade, and it's going to be basically around this. So in the Telegram, I sent this, and now, as you guys should know, if you followed Vertex for a while, you would know that we like to keep things as simple as possible. And often what I see is that Vertex gets referred to as the beginner course for smart money concepts and so on. But to be honest, I don't really understand. I don't really understand that, to be honest. I think it's purely the simplicity that we show makes it sound like it's for beginners. But the whole point about it is you want to make things as rule-based as possible, and you want to keep things as simple as possible. I'm not going to I'm not going to mark random things on the charts or call things random, like random fancy words just for the sake of it, because to be honest, I can't be bothered to do that, and I don't need to do that. My chart, I like to keep my chart as clean as possible. For me, visually, that is what matters, and that's just how I trade. And to be honest, it's probably the easiest way that you can trade, right? So I'm going to show you specifically a counter trend scalp trade that I've taken last week. So I took it on the 11th of October during London. Now, essentially, it's going to follow this. This is the basic plan, and as you would have seen from the previous video regarding order flow, the concept is exactly the same. And as you'll know and as you see throughout the Telegram, every single trade and every single breakdown that we're given, the whole process is exactly the same. And that is the beauty of having a rule set behind. So for example, we never have the confusion of whether we go long or short, purely because we have a rule set to tell us that. We never have a confusion which POI to use, because we have a rule set to tell us that. That is what creates consistency, for me anyway. As when I first got introduced to rule-based trading, I've never looked back, and it's where my progression actually came from. So I'm not going to waffle any longer, because I know nobody likes that. So I'll explain to you how this trade actually took place. But let's start off at what's happening. So the first thing you look for a counter trend scalp trade is you need to have a fracture of order flow. So essentially, if you have bullish order flow, you need to have a break of that flow. If you have bearish order flow, you need to have a break of that flow. Simple as that. And then you need to have a mitigation of the cause of the intent. So that may sound a bit fancy, but it's not. It's basically, if you have a bearish move and a bearish break, you want to find the point that caused that break, and you want to see mitigation play of that. Okay. And then you only want to enter via order flow. And what I mean by await liquidity is generally ideal to wait for some sort of liquidity grab to happen and then look for entries, purely because that is what increases your odds of winning the trade. However, bear in mind that what I'm going to show you is it is just an edge. At the end of the day, it's not going to win 100% of the time. You guys should know that if you've been trading long enough. Not an edge is an edge. It will have losing periods. Okay, that's just how it is, right? It's a very simple plan. Obviously, this is the absolute basic form, but you need to try and make sense of it as much as you can to try and learn it the best, right, for you. Everyone learns it differently, and everyone interprets it differently, right? So let's go to the chart. So this is Euro USD, and the trade was on the 11th. Where was it? There it is. So let's go. I'm just going to go to. Let's start off from here. So without looking too far to the left, now this trade was purely taken as a scalp trade. There was no higher time frame bias, nothing like that. However, although we know the higher time frame intentions, but I didn't want to take the trade based on that because it was nowhere near a POI that I was interested in the higher time frame, which is why I've decided to scalp this trade. So how did it happen? So initially I was looking for longs, and this is what is one of the biggest things to sort of learn, because sometimes, and it does happen often, that you can be so blinded by such a direction. Like, for example, you could be looking for longs this whole way, and obviously you're expecting price to go from here to here and continue, right? Because you're seeing that and you're expecting it, you'll be so blinded by the fact that this is what's gonna happen, that when it doesn't happen, you completely ignore what is happening right in front of you. So one thing that I implore you to do is practice understanding price as it is at the moment, and follow price as it goes. Change your direction. You need to be able to be flexible in terms of whether you go long and short, as long as you have a rule set to do so that will give you the opportunity to either look for longs and to look for shorts on the same pair, right? So what we're expecting is a reaction here and to continue to at least this high as a minimum, right? So I was looking for a reaction here, and then I was looking to enter. Okay, very, very simple. That's an absolute basic smart money concept way to trade, right? So if I play this out, what happens is this. So oops, I did that far too quickly. What happens in this? So the POI gets completely violated. Now at this point, a lot of us get so annoyed that our POI didn't hold. Some of us may have taken some weird entry. There was no entry there, but some of us may have taken some weird entries here and lost. And then we get so annoyed we get frustrated, we get angry, and then we stop looking. Okay, the problem with that is if you stop looking, you are going to completely miss what's going to happen next. And catching these trades it's almost not, I'm not going to say guaranteed, but it's pretty much textbook to work out at least to the first minimum target. Okay, and this can be replicable on any time frame that you look at. However, this video and this example is purely obviously a scalp style trade. Okay, so the first rule that we're looking for is for order flow to be fractured. Okay, so if let's go back, what's happened here is order flow has now been fractured, it's been broken. Now from a basic standpoint, what we can say is that this bullish candle here, although there's not much volume in this, but we can say that this candle itself is a POI. Okay, and what we can say is that pricing above, okay, I don't know why I drew it like that. That looks like a paper clip. I don't know why I drew it like that. But pricing above is pretty efficient. It's only inefficient when we come to here, right? So what we're expecting is a reaction from here. Okay, that's the absolute simple way. But the thing is, there's no confirmation behind that. There's no sort of confluence there. And the thing is, if we're going to look for a trade, what we want to look for is mitigation, and then we want to follow order flow, mitigation, order flow. It's the same thing. Okay, so at this point, what I wanted to do is what am I doing? There we go. What I want to do is understand what's happening in a lower time frame to see if I can grasp an idea of bearish order flow. So I didn't have to look. So what we can see is obviously this whole bearish move, right? But however, I was not interested in the bearish move up here purely because I was only focusing on what caused that fracture of order flow on the 5-minute time frame. And what we can see here is Bear with me. What we can see here is we have some sort of liquidity grab from this high, sorry, and we have a liquidity grab, and then we have a break of structure. And then this high was then, this OB was then mitigated to the refinement point, which is going to be this one. This one was mitigated here, okay, which then went on to cause the break. The interesting part is this mitigation play, what this means, it gives us a point of invalidation, which is sitting here, right? It is sitting above here. So that's going to be in red, just so it's visually clear for you guys, okay? That's the invalidation point. And then what we can see is that price has been made efficient. So we have inefficient pricing here. It's been made efficient before this impulsive move. And now we have inefficient pricing. So in terms of refinement, sorry, I do realize I draw a lot and then it makes everything very messy. There we go. So we can refine this to here. So if we wanted to, okay, we could have obviously had an entry point here, but the thing is, this doesn't really hold too much value in terms of probability. Yes, we could have got an entry if there was one, or we can enter directly off that. However, in terms of probabilities, it's not the highest of probabilities, purely because order flow was only on the 5-minute time frame was fractured here from this move, okay, this move here. Okay, and we did catch this liquidity grab and then a break of structure. So if we did catch an entry here, that's fair enough for the 1-minute time frame and the minimum target being here, that's fair enough. But in terms of the time frame that we're following, because at this point, this was the 5-minute POI, we were looking for a break of structure and looking to enter and so on, right? Now the reason why I didn't enter up here, because it didn't fulfill our rules, okay? Before anyone says why did we enter here, it didn't fulfill our rules, okay? That's the main thing. But traders are obviously some smart money traders who are looking to trade off here, well, obviously would have got stopped down. There's the liquidity being grabbed. Well, liquidity being grabbed and then fail. Anyway. So I wouldn't have wanted to enter off here purely because, as I said, probability is very low taking off the trade straight off from there. You want to have some sort of confirmation and some sort of confirmation of order flow. So now that we have this mitigation play, it gives us that bearish order flow, and obviously we do have the whole bearish move coming above, but I'm not too interested in that. So for me, the only logical point where price can react from is here. But just remember that the invalidation point is here. Now, if you were going to take this trade, you can take this trade quite safely. And this is high probability if you are going to do this. You can have your aggressive stop above this, which is 2 pips. Alternatively, you can have it above the invalidation, which is the safest option. And you can have a 3 pip stop for that 5. Your first target being that 5-minute low. So just a little bit below would be fine. Let's just make it a round number. You can get a 1 to 3 from a scalp, okay? Which is fine. The thing is, if you're scalping, you shouldn't be expecting 1 to 50s from the get-go, because you know it's not going to happen. It's not going to happen. You have to be realistic with the targets, and the way that your targets work with scalping is that you are targeting liquidity points, which is basically your structure or equal highs, equal lows, and so on. Okay, that's what you're targeting. And another reason why this is a clear target is obviously because I know how the trade plays out and I'll show you. But the reason why we know this is a clear target, because this low failed to break any sort of high. So this low is not significant as such. So there's clear liquidity sitting below there. It's a very easy way to remember that, basically. If you see a low or a high that's failed to create structure, then you know you got an ideal target point as your minimum point. But bear in mind, this is the 5-minute low that we're playing off, and that POI is a refinement of that 5-minute POI that's here. Okay, that's the whole way. That's the whole reason we're taking this trade. So if we see what happens next, the trade plays off perfectly, and if you did enter trade from here, you would have been obviously perfectly fine. My entry, which I'm not going to show on this for obvious reasons, but my entry was. Let me move this. My entry was a little bit more refined, so using our refinement method, my entry was here, and I closed 10R on this trade when it hit 20R, and then I left the runner, because for me closing 10R was more than enough, and I just want to leave a runner. And the reason why I leave a runner is purely to see if there's any form of intraday or swing potential, because sometimes you can catch some huge moves from this. And to be honest, even though you're taking partials, it adds up. And for me, because I'm happy with that 10R, if it goes to break even, I don't mind. And that's exactly what happened to this trade. It reached, hold on a sec, I think it reached the peak of 40R before going to break even. Yeah, so I got taken out here. I don't think it touched though. I believe spread took me out. But yeah, it reached the peak of 42, oh, probably a bit more. 43? Yeah, about 43R. But I only secured 10R from this trade, and then I got taken out at break even. Now, the thing is, you have to train your psychology to be able to take this, because at this point I was holding 50% of my risk. And it is quite a lot to close at break even. But for me, as I said, I only wanted to aim for this low, which I achieved. And essentially, I could have had full position closure there if I wanted to, but I'm happy to take the 10R and I'm happy to leave the rest to run. Now, questions that will come up from this is, how did you manage a 0.5 pip stop on Euro USD on my broker? It's generally a 0 pip spread during London as well, where it's high liquidity. The spread is very, very tight, and I don't set limits for these trades. I take these as manual executions if it's a 0.5, purely because just in case slippage does get me. So manual execution for me works best for these trades. And to be honest, I've only recently started using 0.5, and I was comfortable using 1 pip, 2 pip as my minimum, but 0.5 seems to be quite exciting to use. It's pretty much a game changer in terms of in terms of the return of investment, because it achieved 10R in the space of 20R in the space of in the space of 20 minutes. That's it's crazy when you think about it in terms of the return of investment. But that's simply it. I mean, in terms of the way you're going to enter, is you find the fracture of order flow. Okay, you want to see a mitigation play of the cause of the intent. So for here, what we had was, obviously you want to see a mitigation of this, and then you want to enter via order flow. Now for this, if you want to take it straight off the 5-minute time frame, okay, I can get rid of these now. If you want to enter straight off the 5-minute time frame, okay, does it really fit the rules? Because it doesn't, does it? Because if you think about it, the mitigation play is here, but there's no form of order flow just yet. Order flow was fractured, and here is where we had the confirmation, this mitigation point. So if we are going to look for a trade on the 5-minute time frame, obviously we'll look for an entry point here. We did have a reaction, but no follow through. Okay, that's just how it is. Obviously the intention just wasn't there, and there was probably some lower time frame change in trend, which is because that's a very big pullback. But yeah, the reaction didn't follow through. But the rule set is not there to take the trade straight off there, which is why you need to try and make sense of it in terms of going to other time frames to understand what is going on and what causes break. And that is what leads us on to talking about understanding the fractal nature of the markets, right? Because the reason why I went to the 1-minute time frame solely is because we want to fulfill this criteria. We want to trade via order flow, and that happens here. That happens on the 1-minute time frame here, because we have that mitigation play. That gives us an incentive and a motive to take the short, because we have that security. Okay, we have that point of validation to take the trade off from. Okay, simple as that. So if you're going to scalp, this is probably the most basic way and probably the simplest way to scalp. It will take some time to get used to, but for me, I think, and I know people say pro trend is probably ideal. In terms of pro trend, your pro trend model, and when I take a trade when I take a scalp using a pro trend, I'll make another video about this. But essentially, your pro trend model is here. That is what's happening here is your pro trend. Okay, essentially same. The only difference is you don't need to wait for that fracture of order flow. You can just follow the mitigation as price goes. Okay, simple as that. But once I take one of those trades in a recent way, I will I'll do a video and a post about that as well. But in terms of counter trend, all we wait for is a fraction of order flow, and then you want to follow the mitigation and you want to trade via order flow. The reason why, obviously, the way that we took the trade is following our inception entry model, which again sounds like a fancy word, which I know I was talking about earlier about using fancy words. It's basically an easier way for us to it's easier for us to call that as one of our confirmation models for the students. It's just an easier way to say that. It's nothing special as such, but it does allow us to add a bit more confirmation to our trades and having a bit more, having a higher probability, as well as increasing our risk to reward, because it allows us to have a tighter stop loss basically. But the concept is exactly the same. It's exactly the same. But you can take the trade. You'll be able to take the trade straight off from here once you have that confirmation of order flow. So what I suggest you do is, and there's plenty of examples actually. There's plenty of examples within our Telegram. If you scroll up, there's plenty of it. I think these are some trades. I think did I show a pro trend example? That's counter trend. Did I show a pro trend? Yeah. So this is a pro trend example playing now, and there's another video of order flow which explains that in a bit more detail. But that's basically a pro trend example which I took. And here's the execution to show you guys how I do enter these trades. And there's another counter trend. So this video gives you a bit more of a clearer option as well. But as you can see, although this is shown in a different video and shown for a scalp, or shown for a swing trade, you could do the exact same thing for a scalp trade. Our rule set is exactly the same. Another thing I want to talk about is we've had a lot of DMs regarding people using our course, which is great. However, some of you guys are still using the leaked content, or if you're using leaked content on purpose, that's fine. But some of you are being scammed and you're paying for the leaked content, which is most likely the old content as well. And you don't get the updated trade breakdowns as such. So to prevent that from happening, this is the only website that you can have access to our course. And we do have several options, right? So of course, we've got the trade membership, which is our mentorship group. It's a one-time fee. And you have access to myself and the other two mentors, as well as our full course. This is something that we are incredibly proud of, because the support is the main thing, it's the main reason why I started Vertex. By background, I love teaching. I mean, as soon as I became a qualified teacher, 2 years in, I started teaching physio in my area of expertise, and I still do that today. I just love teaching. So for me, it made sense to teach what I enjoy doing, and that is the reason why we have this option. We also have the bootcamp option. Now this is the most expensive option, but this is where some people who like to be taught live from us via Zoom will love to do in-person courses at some point, but at this point, because of COVID, we're unable to, I'm afraid. But we'll see what happens in the near future. But this is for people that want to be taught directly by us, whereas in the membership you get taught via videos, but of course you have us in the Discord to support you wherever you need. So that's the main thing. And then what we have is a cheaper option, which is a course program. And I did a post about this in the Telegram group, because some of you guys are paying the exact same as our course program for old videos or just a bunch of files, whereas here you can buy it directly from the source. Now, if you do want to join, obviously, the Vertex course program, which is basically you can use it as a trial to see what our content is like, you will have full access to our strategy. You'll be able to learn the scalp model that I'm showing you in more detail and learn it exactly with the inception model straight from here. And all you have to do is click join now. It'll take you to this page, and you can cancel at any time once you have access to the course. But the main thing is, be safe online where you spend your money. You shouldn't be scammed on this. Please do your due diligence. Anyway, but they're the three options that we have, and it's the best way to it's the only way to get access to the course. And for any course access, you'll be added to a Discord. You'll be added to a Discord channel. So the membership and the bootcamp are in the same Discord server. So is our mentorship server, and the course program has its own server where you can talk to other traders within the course program, and I pop up here and there as well as you get all of this that's included as well. But I hope this video was useful. I don't want to talk. I don't want to make this a marketing video, but it is what it is. What you can see here, if you want to join. This is essentially it that you need to understand and learn. What I suggest you do is take some time to back test and understand what's going on. And if scalping is for you, this could be the video that could, you can use to potentially become consistent. Because a lot of us, especially new traders, like to have quick trades, quick money. When you want to be quick in and out. This is not a guaranteed way, but it's probably the most simplest way with logic, which is the main thing. You want to have logic behind everything that you do, right? So I hope this video was useful, and as I said, once I get a pro trend model for a scalp trade that I take myself, because I don't do videos on trades that I don't take myself, because for me, I don't like doing hindsight trades or showing trading view trades, because that's just stupid. Actually, even some of you may have missed it. My execution for this trade is here. Here it is. Yeah, the execution's here. I don't like doing videos of trades that I haven't taken myself. It's just pointless, and I'm not gonna make that up really. But anyway, I hope this was useful. But once I get a pro trend model, I will post that as a post first, and then do a video on that, of course, just like this one. But I hope you guys have enjoyed. Be sure to like and subscribe. I suppose that's a standard YouTube thing to say. I don't think there's anything more for me to say. But anyway, take care of yourself, and more importantly, trade safe.